everything, and you'll hear me go off, then you can chime in later.
Okay.
Hello everybody, welcome into another live session here with EGA. We are going to be starting off this week. We also have a special guest with us today, one of our moderators from our Discord community. Peter is here to join us today. I hope you guys are having a great weekend, planning your week ahead this week. We're going to be covering quite a bit of material this live webinar session, so I hope that you guys will join us. And let me just post the link on the Discord. I forgot to do that actually. Alrighty. Nice. Okie dokie. So, very quickly, want to go through the macro background. Also, Peter, feel free to chime in here if you have any questions about it, and then that way we can have like an interactive session. I like having people onto the webinar because I think it's gonna, increase the questions that we can ask, and you might ask things that might be on other people's minds too. So that's another great thing that we can add to this. Okay, so very quickly, I want to go through the macro conditions of the S&P 500. We have a very big week ahead of us. We have quad witching, which is the expiry of multiple financial instruments in the same week. For those of you that don't know what quad witching is, it is when we have options from various different financial instruments, futures, and etc., expiring all in the same week. What does quad witching typically do? It creates unusual levels of volatility, increased levels of volatility, so to speak. So that's something that we'll have to watch into this week, right? Keeping track of these economic events are important. Adding onto that pressure, we have the Fed, which will decide on key interest rates this week. That has been another development that we've been talking about on this live webinar and on the Discord for multiple months now. And then the development of the Ukraine and Russia war, which has kind of catapulted inflation, including energy prices, which are probably going to transit into other segments of the market in the near future. So how does the Fed decide? This week is going to give us a good idea on the pipeline of future rate hikes. If the Fed decides to go for a 25 basis point hike, then we will see this as a very dovish Fed. A 50 basis point hike is what the consensus is pointing to right now. So 50 basis points is what we're expecting the general consensus to be. Anything above that should seem possibly slightly hawkish, but not unusual. The market's pretty much priced in up to a 75 basis point hike at this point, and that should be pretty nominal heading into this week as an expectation. So don't, when they come up with the news, I would say the best way to play the Fed news is to not play it. That is always my the way that I look at the Fed data. Whenever Fed decide weeks come, never ever play the actual move or don't try to speculate on it. It's just pointless. What you should do instead is concentrate your efforts on pivot points and directional plays. So market continues to be slightly pivoted towards the downside. Retail positioning is still extremely bearish, but then this gives us a lot of risk appetite and risk to reward ratio to the upside. So from a macro standpoint, there's a lot going on. Looking at the key pivots are going to be the main focus of this week, instead of trying to predict and trying to figure out where we're going. So from top to bottom so far, we've had about a 14% correction. We're maybe around 13 or 12% right now after a little pop back. And it doesn't mean that we can't get back there again. There's been a very clear downtrend descending pattern on the SPX here. So let's jump into the technicals and see if we have any things to look at. But right before that, Peter, you have any macro-driven questions that you want to ask?
Yeah, I was just wondering, you follow Chinese names, and the recent thing with China has been they've been requested by Russia to provide military support for the campaign in Ukraine. And I was wondering if you saw any headline risk to Chinese names associated with a decision by the Chinese government, if they end up deciding to help Russia.
Yeah, so
take a hit.
So absolutely, I think that this is a good question. I think right now Chinese markets are in a rout because of a lot of different things being priced in. But however, there's some bad news and then there's some good news. So let me try to break it down in a way so that everybody can kind of get a good understanding of this. Russia and China are allies in a background setting. The Russian sovereign wealth fund has been very severely de-risking from US dollars into yuan in the past couple of years, and this has been a multi-year thing that not many people have been watching, but it's something that's been happening in the background where Russia has been letting go of US reserves and piling on Chinese yen. This dynamic, if caused or exacerbated further by escalation, that could definitely cause more pressure on Chinese equity. It could cause pressure on in the entire Chinese market. You can see that, in fact, a lot of the gains that the Chinese market has been trying to make up for has been given back. Like look at Asher, which is now aiming for its $30 level, or even might go down all the way to around 29 before really rebounding here. Look at the K-Web index, which is the Chinese tech ETF, and which I have been saying has been a great buy and continues to be a good buy, was down 10% last week on further fears about this matter. Now, a lot of this selling has been extremely overblown, obviously. A lot of pressure to the downside here is causing panic selling, right? Everybody doesn't want to hold Chinese tech now because they feel like there's a lot of tension around the world and it's just not worth the risk. But remember that Chinese equities still remain some of the most competitive companies around the world with very slim operating costs, and at the same time, very good dynamics for sales and revenue generation. Here's the other thing, which is, so that's all the bad stuff, right? That's all the bad stuff. Now, what about the good things? What are the positives, or the positives, the signs of a good reason to invest in China right now? There are a couple. The first thing is the Chinese central bank is ready to support the economy, and they have been signaling somewhat dovish expectations in the coming months. The other thing is China has actually controlled their COVID rates pretty stringently, and when everything comes out of lockdowns or shutdowns, which China, by the way, is very strict about, it's going to be one of the most crazily rebounded economies in a long time. And I think that obviously, when you look at something that has lost almost 80% of its value, to me, that's a screaming buy, right? A lot of these businesses definitely have intrinsic valuation that are just far away. It's detached. A lot of these stocks are detached from intrinsic valuation. And, when we look at these things, we have to realize what they are. And I posted a little blurb from our Instagram story speaking about how you have to have the grit to hold through times like this in order to be rewarded as an investor. So that's kind of my take on China right now. You gotta clench your fist and really hold on tight if you want to survive this, and be ready to add tranches on the dips. Like I'm fully allocated, so I won't be adding anymore. But for those of you that haven't started a position in China equities, or you have one exposure, I can't think of a better time for you to pick up some and hold some of the great companies that are profitable. Like Baba is at a deep discount right now, right? Irrational. And then even Tencent, right? A really great company selling at a very deep discount. Company like Baidu, right? Another one, really great discount. So these are all great. Even JD, another good one, right? These have all been irrationally sold off. So that's my take on it.
All right, I think that definitely answers the question I had. And then sort of a kind of a macro question, but more transitioning into the technical picture with the index. How do you see dealer positioning this week? institutional positioning and coming into the Federal Reserve decision and the quad witching and everything else that's going on.
So based on what we're looking at on dealer positioning, from what I've been studying over the weekend, gamma positioning is pointing towards a week with not much bullishness, actually. We don't expect market makers to take on exposure here because there's a lot of uncertainty on both sides. Volatility will be treated as a wielded tool in both directions here. So in other words, right now, dealer positioning is very hedged on both sides. We don't see, we don't see increasing levels of skew to either side. And what we see instead is more like a buy the dip, but you sell it very quick. And that's one thing that I'm looking at this week. So if you do see a rally this week, the idea is sell it. Sell it. Yeah. And of course, if we don't pivot over those points, then just stay bearish because that's what the trend is, right? You don't fight the trend. Somebody says Jerome says Peter is very muffled, quite a bit of echo. Oh, let me lower the volume. Maybe that's what the issue is. Can you try talking once again, and then we can see if it's better.
Yeah, there's a sound.
Okay, let's see. Hey, Jerome, let me know if it sounds better. Okay, so let's jump into the technical portion of SPX this week. Some very key levels here. So first of all, I just want to zoom out here to show you guys. This is previous price action from SPX. We have very strong demand at around 40.62, and then let's just say 40.40 even, right? Around 41.38 has been a very hard bottom here. We have seen very strong level of support here. So 41.38 is a key pivot point this week. And the break of 4200 will give us a slide into 41.38 once again. If we lose 41.38 and for some reason don't bounce until 4100, then the slide all the way to 40.40 happens. That's a possibility here. Okay, that's downside bear case, continued bear case, and that will remain the bear case for a while. Okay, so now then we zoom into the current, spot, and I've already drawn those lines in for you. So I wanted to show you guys what that looks like just from this perspective zoomed in, right? Bullish case on SPX is only if we really break above 43.20, 43.10, this little zone over here. We need to really crack open 43.20. And 42.20 is a key level because this is also happens to be where dealer positioning sits for a gamma flip. So this is a key positioning for bullish positions if we can break and bounce above this level. Otherwise, we continue to see downside risk. Retesting of 42.80, very highly possible. 42.80, 42.90, and even 4300. This zone is very highly retestable this week, which means to say any rally into this should be met with some contest from bears and then possibly shorted back down again. And so we want, this is also where dealer positioning is, so we want to be careful of that as well. So this is something that you have to be aware of in this week. So your pivots are going to be 43.20 and then 4200 for the week. Let me just pen in the 43.20 for you guys so you can have a look and see for yourself. There you go. So this one right here. Oops. Here, let's just say 43.19, 43.20. That's a pivot point. Break above and retest on this zone gives us the further upside. And I don't think that's happening. A very low chance that happens. Higher chance that we try to get up there and then reject and then come back down to retest 4200, 41.38, and then ultimately 40.62 if we continue the bearish trend that we are in. QQQ here, pointing to a continued descent, but in a very, very key position here. So QQQ is in a very interesting position. And this could be the pivot of the market. Okay. So there's a couple of things I'm looking at here. Tech with a very sold off nature doesn't give us as much downside as SPX does. So there are more sectors that have further downside but are sitting on oversold levels. Not to mention that the Z-scores of the entire market sectors are very, very, very imbalanced right now, just so you guys know. Let me just show you really quick. For those of you that don't have access to our Discord, I'm going to share one small thing with you guys, which is the sentiment indicator from Goldman Sachs, right? And you can see the Z-score, which is the mean reversion, or how far the market is from mean in terms of positioning. And we are at extreme light positioning right now. This is actually hasn't happened since a very long time ago. And when we get this stretched, it is really just a week usually of risk off. That's typically what we see. With this kind of a sentiment, we typically see risk off in markets. Not to mention, of course, I've put out an entire report on the kickstart for the week, how Goldman revised everything, and we have the projections for this week. For those of you that don't have access to our institutional research, it's all on our Discord, and it's only part of the Wolves subscription, which is the middle tier subscription. So if you want the institutional research, then you have to join the community. So talking about SPX here very quickly. Sorry, QQQ, not SPX. This level here, the 320 level, has been a key level for bouncing at least twice now, similarly to SPX. And it has been a key level for a lot of bulls to come in, and we're seeing that falling wedge pattern play out. My take is that there is a better upside here than there is a downside on QQQ right now. The downside is at around 320. The upside, though, could be up to 335, and any rally into 335 could be met with another rejection to the downside. So short-term bullishness here should be sold into if we see rejections at 335. That's what I think. Moving into this week, that should be the playbook. Just looking at the key pivot points in this market. So very quickly, 335 right here, boom. That level is a rejectable level, and then your support, or weekly pivot, is going to be around 320, which is here. Break below 320 gives you the downside extension, and then would also negate this trend, which has been ongoing for multiple months. This white line that you can see, right, has been a trend line. So if we break below that, then we're going to really slide here on QQQ. We'll probably slide all the way down to the last line of defense, which is $300. Only if we break 313, 315, that level. And so the bear case here is the pivot point is 320. So take it pivot by pivot and play it like that. Instead of looking at it on a bigger frame, it's much more difficult to figure things out like that. Okay. So keeping it very simple here. Then looking at IWM, of course, small, mid-cap, SMIDs, I like to call them. Still very ranged. As last week I mentioned, still ranging, and we don't want to play a range. So this continues with the same analogy as last week, where we see any break above 205 or below 190 to be bearish or bullish developments, respectively. Of course, wait for the confirmations and bounces as usual. Wait for that institutional flow to come in. We still do see a lot of hedging going on as of last week. Lots of puts were being bought, out the money puts, stuff like that. Okay, and yeah, so that concludes all your three major indices. Any comments, Peter?
No, I was just having a thought. I was wondering what you thought of the notion that if the NASDAQ reverses here, like if it finds support at that 320, 315 level and bounces back up, would that be enough to start reversing the trend in the S&P?
That will all depend on how much volume, and also if we can see behind all that volume and behind all that movement, if we can see equity buying through dark pools, number one, and number two, derivative positioning from smart money. So the short answer to your question is, we will only see if that is a plausible move a couple of days after it happens.
Gotcha.
In other words, we'll be looking out for dark pool orders to confirm after 48 hours that indeed, equity was bought, and behind it we can pair that equity with dealer positioning, market maker positioning, smart money positioning in derivatives that will be along with that. You get what I mean?
I do.
So
you have to confirm that the rally is not superficial.
Exactly. And also, if it's a low volume rally, then we're likely not to see a reversal of any kind.
Mm-hmm.
So that's really how you're going to confirm if we're going to see a reversal of trend. But 335, breakout of 335, and even 340 is a really good pivot point for upside moves if we can hold above it and stay above it for a while. Now, one of the key things that we will see before market reversal typically happens is volume dies out and we start consolidating for a while. We haven't seen consolidation yet. We are starting to see a little bit of consolidation, but not a lot. Like, this is slight consolidation here. We're likely to go sideways here for the rest of the week until the Fed meets, and that should be the main focus of the markets this week. So directional plays are really what you want to go for. Okay, now the next thing I want to talk about is the 10-year yield, which is really important here. For those of you that don't know, the 10-year yield has crept back up after having a week of cool down. And we're also looking at the yield spreads start to point towards a recession. Remember, the bond market sniffs out things before it really happens, and we're seeing a lot of data that is creeping into telling us that we might see some of a little bit of a problem here. The 2-year and the 10-year yield curve spread is now currently at the flattest it has ever been since Q2 2020 at just 24 basis points. And so this spread, by the way, has typically been inverted before each of the last 3 recessions that took place. So that's a little bit of a precedent that we have to look at, right? It's kind of like history, right? And history usually is right. So we'll be keeping a close watch on yields this week as well, going into the Fed, because remember that interest rates hiked erode real returns on yields. And so there's a lot of bond dumping happening ahead of the Fed, which was the whole of last week. It already was happening last week. Nobody wants to hold bonds right now because the yields are about to be going to shit right after the the Fed announces a rate hike or their target rate hike, right? So that's another thing that you should keep a watch on. And of course, despite recessionary indicators that are flashing, travel and leisure are the ones that get hit a lot when yield curves flat out, right? Like in 2020, do you remember? That's exactly what happened, right? You can see there was a lot of that pain that happened to select few stocks on Monday. Let's have a look at them and you'll see what I mean. Look at RCL, right? One of them. Look at how they've been just dropping the whole of last week, right? Like for example, Hyatt, right? Another one. MGM, another one, right? Jets, ETF. And then you also have Brinker, which is a very big food conglomerate. This one is like they own, I think, Maggiano's and a bunch of others, restaurants. So a lot of these have been getting killed the whole of last week, mainly because yield curves have been, just throwing out a warning here about recession. And recession causes fear of, lower consumer spending, and then this is the reason why the market priced in a big drop on some of these stocks. And remember that Brinker and DRI is Darden Restaurants. These are 2 of the largest consumer-facing restaurants in America. So there is really, a big warning sign here by bond markets facing at further calamity going into the future here. So I'm just driving through all the technicals and macroeconomic stuff here so that you guys get a good understanding of it. So that's important to note and keep at the back of your head as you're trading this week. I would keep risk extremely small and limited this week. It's really not a great time to be taking on risk this week, especially with the amount of events that are happening. Really only be taking directional plays. Okay, so what are some of these directional plays? Let's have a look at some of these. Boeing here is sitting at a very key pivot point, and I like these kinds of setups. Let me just explain why. When you're sitting at a setup like this, where where it's likely to trade in a trend sideways, you could just take an upside and a downside pivot here and make your trading a lot more easier. So with Boeing, 185 roughly is the upside pivot, and the downside pivot is roughly going to be below the low here, which is around 168. So these two levels will act as upside downside pivots, and we should look at them as the levels that we watch throughout this week here. So 168, 185. Any move in between, you ignore. Simple as that, right? So that's Boeing. And remember, as usual, don't just trade the breakout. Breakouts have been very unreliable these past couple of weeks. I got burnt myself last week on a couple of breakouts, right? These didn't go as well, but we still ended the week pretty strong with $23,000 in profits, roughly. The total P&L for the portfolio stands at $164,000 for the year, and this is just me tracking it live along the Discord so that for transparency. This is what we post every single week, so that everybody can follow along. This was since the 1st of January. Every single trade has been logged ever since. Some weeks I did not trade at all, and so you would see like last week I didn't trade, and so we jumped from this week to this week. Last week I was in the hospital, so didn't really do that great. I did realize 2 losses this week, so for full transparency, 2 losses of about $64,000 on SPY and QQQ upside pivots that I had. But these were hedged out, and they were offset by gains in a hedge that I took on QQQ, this one right here, and other trades that I took on Amazon to the downside. So that was more than paid for and compensated by other trades, and that's the reason why the yearly P&L is still very green. We'll see how the year ends, but as of right now, it's not looking too bad, and I want to be as conservative as possible heading into this next this next quarter at least. Okay, next up is NVIDIA, and once again, very nice pivot point over here. 216.30 is a key pivot for the week. Any selling into here, into the 213, 216 zone should be, if you see big buying come in with above than average volume, definitely play the rally up to around 230. 230 seems to be a reliable level here. And then with AMD, it's not looking as good as NVIDIA. With NVIDIA, we still have, a falling wedge pattern, but with the AMD, we are kind of moving away from a wedge pattern, and now, well, honestly, we could draw it into a wedge if we wanted to, and kind of do it, similar as NVIDIA. But we'll have to see how this pivots this week. And with AMD, it's really difficult to choose a pivot above this. So we don't really see any key pivots here until $99. So $100 roughly is the pivot on AMD, and only trade below $100. And the upside is a bounce anywhere between now and 100. So the upside pivot is really difficult here because choosing the upside pivot is very messy here. Anywhere below 104 all the way to 100 is an upside pivot. Industrials, another sector we're looking at. I'll give you guys more updates on industrials in the Discord. This is more of a private thing that I want to share with you guys. And then let's also look at some of the more sturdy stocks that have been trading kind of sideways here. Johnson & Johnson, looking for a possible upside pivot. this would be the upside pivot here at around a breakout of this level and sustained rally above 173 or 174. Let's just say 175 even. This is kind of a supply zone here, so we're waiting for a pivot in this little region here, and this region is going to be a key level for reversal on J&J. Play this to the downside. If you can catch that, that will be a good one. Procter & Gamble, this is another one that has been massively sold off due to fears, consumer fears last week. Looks like we're hitting key demand here. We'll see if we can consolidate and then head for an upside extension. Another one that I want to look at this week is Plug for a downside pivot here. If we can get a wave up and reject, $25 would be a nice pivot for rejection, roughly. Looking at around 25 bucks here. Here, roughly. So upside projection, rejection in this level here. We'll see further slide into around, let's say, 22, 23, that region. Could be a nice, this one could be a nice day trade. I think it's more of a day trade. Then we also have Visa hitting a very key level of demand here and bounced pretty strong. We'll see if we can continue to break out here. I already have an alert set above $200 roughly, $201. And then we have NET breaking down from a bear flag, and this should see further downside slide into the $78 if we can break below 87 here. So this is a key one that we're watching this week as well. Okay, then the others are all going to be posted on the snipe list, and I hope that none of these move too drastically pre-market. Asian session is pointing to not much actually. Not much activity going on here, just really bouncing around a little bit. So not anything definitive yet. We'll keep you updated doing pre-market on the Discord there. Any questions on the technicals side of this?
None from me. That was a good, succinct explanation.
Okay, cool. Yeah, so that's all we actually have for you today. I want to keep this webinar as short and sweet as possible. I hope you guys enjoyed it. We'll see you guys back again next week. I know these can be pretty lengthy, and I like spend a lot of time to cover everything, so it's comprehensive. But I hope it helped you. If it helped you, smash the like button. We appreciate it, and we'll see you next week. So that's where it ends. By the way, anyone in the live want to ask any questions? I'll be here for like let's say 1 or 2 minutes more and answer any questions. So go ahead, ask any questions if you have. I'll be here and just looking at things in general. Oh, not to mention, the put to call ratios are now at an extreme level. So remember that the bias here is still to the downside, and we don't switch our bias until we see clear reversals and confirmations. Everything is still biased to downside movement. Any rally should be met with selling as long as you see a rejection. All right, I don't see any questions. I guess that is all. Well, thank you guys for attending the webinar, and I will see you guys next Sunday. Peace out, guys.